Very good.
Okay, good evening. This is Lindenville Central School District Audit Committee. Today is October 12th, 2021. The agenda is a simple agenda. It's two components. First, we're going to have Chris Barone go over our internal audit. She's our internal auditor, the claims auditor. She's going to go over the results since the last audit committee. And then second, we have Ray Wagger organization underneath MMB. We have John Rekowitz. Hopefully I didn't mess that name up too bad, John. It's a lot of letters. So anyway, do we want to do an initial?
No, just go ahead.
Okay, then we'll just go ahead. Chris, thank you.
Can you remove this to talk?
Yes.
Thank
Just
you.
talk- Just turn the microphone on so we can.
Thank you. Good evening. And hi, Ted. Nice to see you. Did you both receive my letter in the general fund packet from today earlier? Joe, did you
Yeah, we did
forward that? Okay. As you can see, I only had 307 claims since July 1st. Not much to report, really. A couple of checks had to be voided due to printing. One had to be voided because they didn't charge us for parking. And the other one was a payroll error and a new check was issued. Other than that, I really don't have a whole lot to report. I think our next audit, there will be a lot of claims. Jen Button has been out, so claims have been at a minimum.
Do we have any questions? Okay, Chris, thank you.
That's it?
That's it.
That's
Yeah,
it?
your piece. Next, we're going to bring on John, and he's our auditor, principal auditor from Ray Wagger organization underneath MMB. John will go over the executive summary of our financial audit for 2021 school year. Thanks, John.
Okay, thanks, Joe. So everyone should have a copy of the basic financial statements, a copy of the management letter, the internal control communication, and also a copy of our financial executive summary. So I'm going to walk through for you tonight is the executive summary. And as you know, if you've seen this before, it's a real shortened version of the statements. It has all the same financial information in it, but it really just focuses mainly on the statements for the individual funds and just a little bit more concise, so it's a little easier to kind of go through. And so if everyone wants to take a look at the executive summary, we can turn to page 1 and talk a little bit about the general fund. So page 1 here is the summarized balance sheet for the general fund. And it provides comparative balances between last year and the current year. And so as you go down from the top where your assets, your cash and your receivables, and then your liabilities, so some of those unpaid bills at the end of the year, and down into the fund balance section, so where your reserves are and some of your encumbrances, so the monies that you have set aside after all your bills are paid. And you see you have balances, these restricted, these reserves. So those are monies that the district's been able to set aside as part of, to help fund your future budgeting, set aside for planning for your future budgets. And at the bottom, your unassigned fund balance, which is the amount that hasn't otherwise been restricted. And just looking at the balances, the changes here down in the equity section, the fund balances, we can see that the district actually had some surpluses this year, and you used those surpluses to help fund your reserves. So you're setting some money aside, again, for to help support your future budgets, which is when we're looking at the financial health of the district or kind of how you're doing. This is the area we're going to spend a lot of time focusing. These reserves. This is kind of like monies you set aside, like a savings account. So how you manage these and whether or not you have these and funded is really where we're looking for to make sure that the district is doing pretty well financially. And as you can see, you've increased fund balance overall, $790,000 based on surpluses you've generated. So that's good. That's a real positive way to end the year. And just to kind of talk about that a little bit, and what happened this year and how we started the year. If you recall last year, we were talking about a lot of challenges that the district might be facing because of the pandemic. And there are a number of things that were happening at the time. The state was withholding 20% of its aid payments that it was supposed to be making to you. They talked about and did deduct some of your foundation aid under the premise that it would be cover the gap for that would be made up by monies from the CARES Act. And there was a question whether that was actually going to happen or not. And there were unemployment costs that we didn't know about. And there were other costs related to the pandemic. So that we weren't sure how that was going to all play out, spending money on PPE and what other additional costs might happen. So this district positioned itself and did the right things, and you watched your spending and you were very careful. And as a result, when things changed, the state restored all of its state aid that it was withholding, that 20%. The CARES Act money did come in and covered the deduct from your foundation aid. This district actually was in good position now because you guys did what you were supposed to do. You actually generated surpluses this year. You planned for the worst and hoped for the best, and actually the best is what happened. So that's very good. You did the right things, and everything came out very good this year. So again, as we talk about the financial condition, the fund balances, the reserves are kind of where we like to focus. If you turn to the next page, this reserve analysis, this shows you how your reserves were utilized this year, and what you were able to do as far as setting money aside. At the top, these are the reserves. So the way this report is organized, goes from your reserves with the least amount of restrictions on them legally down to the most restrictive reserves. So at the top, you have several reserves. You can see that you did appropriate some out of your employee retirement reserve and your workers' comp reserve. You did appropriate some money out of your unemployment reserve, but that actually those costs were actually covered by the state and the federal government this year. So that was an unexpected bonus this year. Any unemployment costs were actually covered by through the CARES Act and through the federal government and through the state. So there wasn't any actual cost there. But you can see in the appropriated column that you were utilizing some of your reserves. You did utilize some of your capital reserve for your annual bus purchases, right? The voter-approved bus purchase projects. And equity transfer, you can see that the district was able to fund reserves out of surplus. Again, that's what we look for if we're looking to see how is the district doing. Are you utilizing reserves? If you appropriate from them, are you able to utilize them? And then are you able to put those monies back? And you can see this year that the district was able to do that. And at the bottom of the page, you can see that you are appropriating some reserves for next year and some fund balance. And again, we talk about appropriating reserves. That's something that you can do as part of your long-term plan. Make sure you're monitoring that. If we're going to spend money out of our reserves, do we have a plan to put some of those monies back. Another thing just to kind of talk about, some of the reserves that the district does have this year, your capital reserves. So you have your bus reserves, which total about $730,000. You know that you spend about $100,000 a year on buses, a little bit over that. So you're actually funded for a couple years for your bus projects. That's a very appropriate use of those funds to have set aside some of those monies. So this district has in the past done a good job and funded these capital reserves. You do have about $3 million additional dollars in your other capital reserves. Those are available to fund any future capital projects. And when we talk about capital projects, the local funding that you're able to do, the benefit there is that those dollars, which are the district would be required to spend, if you can provide those dollars up front, that reduces the amount you need to borrow. And but however, the state aid, the building aid on that continues to generate as if you did borrow. So by being able to set aside some of these funds and provide them at the front end of the capital project, you're still generating aid, which is a very good financial planning. So you do have some of those monies set up to help you with some of your future capital projects, and that's a very appropriate and good use of those funds. Okay, and the next couple pages kind of help us kind of look and see how did we generate surpluses. If we go to page 3, this is your general fund, your revenues. This is a comparison of your budget to your actual dollars, and we have comparative amounts compared to 2020. Probably the big swing you'll see here, you have state sources. You'll notice budget to actual last year, you had a negative here. That was due to about $350,000 of building aid you had anticipated that you would receive due to the completion of a capital project, and you did file your reports on time. However, the state did not provide that aid until this coming year. And as a result, if you look in 2021, where it says state sources, you see this variance of $870,000. A portion of that is because now you've received the building aid you were anticipating last year. And also the state had revised some of its calculations, and you actually did receive a little bit more aid than you were anticipating this year. And that's not necessarily typical, so that was a good thing. The increase in the federal money here, those are the CARES Act monies that you received this year. So you see that spike there. And just to talk a little bit about the CARES Act monies. So there's really 3 rounds of economic recovery monies that have come in. One through the CARES Act, one through the second round, which is referred to CARISA as CARISA funds. Don't ask me what that stands for. And then the American Recovery Plan, the ARPA monies, is the third round. So this district is receiving monies through the CARES Act, CARISA, and then these ARPA funds. Because of the way the state handled the CARES Act money for 2021, the CARES Act money is in your general fund this year. Next year, when you receive your CARISA and your ARPA monies moving forward over the next 2 years, those funds are actually going to be recorded in your special aid fund. Okay. And something just to talk about with those funds, last year we talked about challenges with aid being cut. This year it's kind of a different challenge. You're receiving a lot of extra money through these projects, and the challenge there is to understand that these are really short-lived monies. They're coming in over the next 2 years, and then they won't be there following that. So any spending out of these really have to be made with kind of that short-term plan. They really should be based on these one-time expenditures rather than those ongoing expenses that you'll have to account for once those monies are gone.
If I could just comment there on that.
Yep.
One of the the point John made is very important. That's one of the reasons why, we're not trying to hire new staff. Some districts have hired new staff, and we have recommended to not do that because it would be a recurring expense, and then the staff would likely remain. So what we're trying to do is the staff that we currently have. Now, there have been some new minor positions funded through that, but by and large, we did not fund new staff. We already went through that 2 or 3 years ago. We added reading teachers, literacy teachers, special ed teachers, that type of thing. So we're not looking to add new staff. We are going to get, once it's approved, significant reimbursement from the COVID money that we spent way back in March of 2020. So that includes things like the masks, the barriers, the temperature scanners. Even though that money has already been spent, we can still go back and reclaim that. So John's point is valid. We don't want to have this be a recurring expense as far as hiring new staff. There's things we can do, such as staff development, training, summer work. All the summer work we did all summer that you all approved, that was all funded through the federal money. So thank you, John.
Yep. Okay. So those are your general fund revenues, and you can see the budget surplus was about $1 million there. The next page are your expenses, and again, same. You're comparing your amended budget to what your actual expending was year over year. Okay. And you can see really the variances are pretty consistent year to year, and a lot of this is just kind of conservative budgeting, which was appropriate this year. With a lot of unknowns, it was really important to make sure that you were trying to control spending, and you did that. So your expenses are very consistent year to year compared to budget, so that's very good. So that's the general fund. Any questions on the general fund? That's kind of the big main operating fund. So want to make sure nothing there. Okay, moving on, the page 5, this is the summary of other funds. So the district has several other funds that it operates. The first one at the top here, school lunch fund. So the lunch program, the thing you're going to notice this year is the revenue in excess of expenses is much more than it was last year. The reason for that is because as part of the CARES Act, the students were receiving free meals all year. So rather than having a reduced and a full pay program, different students paying different amounts and receiving different reimbursements from the federal government for those, all students could receive a free meal, and that reimbursement rate for those free meals is a lot higher than the full and the reduced price one. So the district actually received a lot more money this year just by continuing to provide meals. And we do have a note. So your fund balance at year end is above the, there's a federal guideline which says that fund balance can't exceed 3 months of your operating expense. You're above it, but that's because all of this additional money, which really wasn't anticipated, came in this year. And talking to Joe, you guys already do have a plan or developing a plan on how those monies will be spent. So you're already working on that. That's very good.
Comment on that particular plan, the board members will see it tonight. I got a question on that from one of your board colleagues. The question was, how come we can't use the federal funds to pay for the cafeteria monitors, right? So as John said, and Joe said, we're over that limit. We're we're not short staffed. We have fill positions in the cafeteria monitors. We're across the street, right? Serving lunches there. So you'll see a recommendation from Melissa and Joe and I that we hire a couple monitors and we would pay for their salaries, but their wages through the cafeteria funds. So that would help bring that money down.
Mm-hmm. Very good. The next fund here, Miscellaneous Special Revenue Fund. This is one that we haven't seen before separated like this. And this is due to the new accounting pronouncement that required the school districts. It's GASB 84. So the Governmental Accounting Standards Board issued a new accounting pronouncement and told you that some of the items that you previously accounted for in your trust and agency funds, it wanted to see them recorded in some different places. So basically what these dollars are those scholarship funds that you used to have in your fiduciary funds in the trust and agency fund are now broken out, and they're actually being reported here in this miscellaneous special revenue fund. And we did provide comparative numbers. That's kind of on a pro forma basis, just to show you this was the activity that you saw in those last year. And you can see the activity for the current year. It's fairly consistent. So nothing much to report there. But that's what that is, and that's why it's new. Special aid fund. So just to talk about this, so on a normal year, you would see this fund, you'd see revenues and expenses equal. And that's because the funding for these, for this fund comes in at a dollar for dollar basis. So it's most on a reimbursable basis. You're going to see the money come in and the money being spent, and then money coming in from the state and the federal government to pay for it, and with some local dollars. And typically that's done on a dollar for dollar basis. For the current year, what's happened is, and we talked a little bit about those second and third round of recovery monies, these Carissa and ARPA monies. Now, the allowable period for you to spend those monies actually goes all the way back to the beginning of the pandemic in March of 2020. So you may have already spent monies that are eligible to be reimbursed under these grants. In this case, the district did apply some of its expenditures already to its Carissa monies that you know you're going to get, because the state has kind of indicated what your amount is going to be. However, the state has taken the position that they haven't awarded any of these funds yet, so they're not allowing you to recognize the revenue for it yet. So it's kind of just an accounting situation. So you've already got the expense, you've recognized it. The state's just not allowing you to recognize the money that you will be received to be reimbursed for it. So those dollars will come in next year once the state officially awards that grant monies. So that's why you're seeing this deficit this year, and that's kind of a one-time thing. Next year, you'll see a big revenue without as much expense to offset it. Okay. The debt service fund. So there's a little bit of activity running through the debt service fund this year. So that's the reserve for debt. This is where you normally put any leftover monies from any borrowings that you have on your capital projects. But also when you do borrow and it generates any premiums, that those monies will run through this fund. And in this year, you did issue bonds to help pay for your existing capital, or your capital project that was finished up. You did, and as a result, you did receive some premium revenues on that. You also used some of that money to help pay for the capital project. So you can see your expenses here, which is an appropriate use. You left over with about $97,000, which are going to be available to help you pay your debt service moving forward in the future. Looking at your capital projects fund, so you had the large capital project. You were funding that using what are called bands, so bond anticipation notes, which are temporary financing, 1-year notes. And as a result, you see this kind of this negative here because and again, it's kind of just an accounting gimmick. You don't recognize the funding of the project until you go to your permanent financing, which is the issuance of the bond, which you did this year. So you can see the proceeds from obligation for the bond that you issued. You can also see this number, bands redeemed from appropriations. And what that really means is that you provided some local funding to the capital project so that you wouldn't have to borrow as much. And again, we talked about the benefit of doing that is you're still generating all that state aid, your building aid, but you're not having to pay the debt. You're saving yourself money on not having to pay issue debt and pay interest payments. So that's a very appropriate way to fund the projects. And then because your projects were all complete, you did transfer some residual amounts back out to the debt service fund.
John, before we move off this page,
Yep.
and remember when we talked maybe a year ago, 2 years ago, we were talking about a strategy. The strategy was to do a ban, which we had to do 2 years back. And then we talked about doing a bond or a ban a year ago. It was May of 2020. This is the result of being not going forward with the bond, but doing a ban for one additional year, and now going to the bond this year, May of 2021. We got very favorable interest rate on the ban, and again, a very favorable interest rate on the bond. And the bond is a long-term payment, so the very favorable rate turned into quite a bit of extra money that we're able to put some of it down on principal already in advance. In addition, another roughly $100,000 is available to us to pay in the future. That's what we were talking about. I think you mentioned, Jim, maybe a thought would be, why don't we go forward and do a bond in 2020? And we talked about it. We says, no, a ban is a better choice in 2020, bond in 2021. That small gamble ended up paying off a few $100,000 to the good for us. So, thanks.
Any other questions on any of the other funds here as presented? Any questions? Okay. Great. Last page here is the entity-wide financial statement. So this is your corporate balance sheet. This is in the front of the financial statements. So this is where we take all of your funds and kind of squish them all together and add in some of the long-term items that don't appear on a fund basis. So your fixed assets, your capital assets, land, and your buildings and all the equipment that you own, and also some of your long-term obligations, which includes your outstanding bonds, the pension liabilities that GASB tells us we have to put on the books. So you participate in some pension plans, the state pension plans. Those plans are underfunded at the moment. So the current accounting standards say take those, each district's portion of that liability and put it on your books. And the other piece is the liability for retiree health. So this district provides some benefits in retirement, health insurance to its retirees. And under the current accounting standards, you're required to estimate what the value of that is, not only for your current retirees, but your future retirees, so your current employees who are expected to retire. You have an actuarial study done by an actuary, helps you come up with this balance. And you can see that balance right at the bottom of the report, $5.8 million. And we kind of point that out because if we look at your statement of net or your net position down here, and again, we talk about financial condition and looking at that, you'll see this unrestricted number is a negative number. And a big piece of that is the fact that you're required to recognize this retirement liability on your books. The thing about it is that you're not allowed to provide any funding under the current guidelines. So it's not like you can start setting aside funds to help pay for this liability. So for the time being, this is just kind of a situation that exists. Right now, in our conversations with the rating agencies, they're aware of this. They don't really look at this statement when they're coming up with your bond rating, so they're aware of it. But just so that you know that that's out there. Any questions on the entity-wide statement? Great. Okay. And just on a note on the audit, just want to mention Joe and his team. Again, this was a very difficult year for schools. Again, with the uncertainty of what was going on at the beginning of the year, it really looked like there would be a lot of challenges this year. There were certainly a lot of challenges as far as making sure things happen the way they were supposed to, and shutdowns and that kind of thing. And they really did a fantastic job of weathering that and dealing with all the new requirements and the new accounting principles and getting those implemented. And they did a great job during our audit, meeting our needs and documentation requests. So thank you to Joe and your team. Great job again this year. That being said, we do have one more report to kind of look at, this communication of internal control related matters. So as part of our audit, we do look at your internal control structure, and we do some testing of some transactions. And we do have a couple of just some minor items just to recommendations that we have in the report. I like to point out that there's no material weaknesses or significant deficiencies in this report, which is good. Those are the kind of the big findings that really want to make sure get taken care of immediately. We just have some procedural items that we want to make sure that we communicate to you. The first item, dedicated computer terminal used for online banking transactions. This is really a recommendation that came out of the comptroller's office a couple years back, meant to provide a little bit of additional security for your banking transactions by having a computer that doesn't do anything except for, interact with the online for anything other than working on banking transactions. I know Joe is working looking at your procedures currently to see and make sure that they're as secure as you want them to be. So whether that involves getting a separate computer or just making sure you've worked with your bank and you have the proper security protocols in place, that's our recommendation there. Purchasing, this is just taking a look at your current purchasing requisition, which tells the folks doing purchasing when quotes are needed, making sure that the current municipal law allows you to obtain quotes all the way up to $20,000 for your normal supplies and materials purchases, $35,000 for public works. Your current policies only address purchases up to $10,000, and we know you're working on updating those policies. Self-assessment, so dealing with your business office procedures, making sure that you're reviewing them every few years and making sure that the controls that you expect to be in place are done and still applicable, and we know you're working through that process. Current year items, we had a disbursement. Some of the backup wasn't available for our review. It's our understanding this was just related to a mishap where some items got misplaced. So want to make sure that we're securing our documentation and making sure it's available to help support our transactions. Retirement system. So we take a look at some of your employees participating in the retirement system and the reporting to the retirement system to make sure that that's being done accurately. We had a handful of folks that aren't participating where we weren't able to see the opt-out form. A lot of times this happens for some of the older folks because the opt-out form wasn't always necessary, but we recommend that you do get those in place and make sure that those are on file. We talked about this next item, the school lunch, the fund balance, and being over the limits, and discussed that you are developing a plan already to help address that. Cyber risk management on page 3. We're aware that you're working with Erie 1 to kind of work through a risk assessment, and it's just really important in this day and age to make sure that you're dealing with cyber risk and you've got the proper levels of insurance and you got the right policies and the procedures in place to avoid any risks there. And that risk assessment process is a big piece of that. Your federal programs. So just to mention this year, because of the additional federal dollars you're getting, this district is subject to the single audit requirement. So that'll be a separate audit that we perform and issue a separate report, and it'll be specific to those federally funded projects that you have. Historically, this district's been under the threshold of $750,000, so you haven't had to have that done. But again, with the additional monies that you were receiving this year, you're over that threshold. This item here, federal programs, just refers to, and again, this is more of a recommendation that comes out of the state, making sure you have a procedural manual that deals specifically with the compliance requirements for your federal projects, making sure that that's has been developed and is in place. Okay, to make sure that you've got those internal controls that guarantee that you are complying with your federal requirements for those projects you have. Next item is something that's been implemented to our satisfaction, so very positive to see that. You are reviewing your stack submissions and making sure that that those are accurate, which is really important to make sure that you're being reimbursed for all the dollars that you do spend for your extended school year projects. So that's a very positive. Any questions on the internal control related or internal control report or any of the other items that we've discussed so far, or any other questions that I can help with? Great.
All right, John, we'll see you at 7 o'clock, and just make sure you do the second link. There's a new link for that meeting.
Yep.
Right.
All right. Thank you, everyone.
Thank you, John. See you soon. Okay, so if there aren't any more questions, this is closed. Thanks. Ken, I'm trying to imitate you. Do